It's Thursday, July 14th. Welcome to Market Foolery. I'm Chris Hill. Joining me in studio today from Motley Fool Funds, Bill Barker. And from Motley Fool Options and Pro Canada from the Great White North, Jim Gillies. Good to see you.
Good to be seen.
Thanks for making it over the border.
It's not very white right now, I'll tell you. It's kind of a dull brown. You could probably light my lawn on fire.
Wow, that's... All right, that's an image that we'll just have to try and move on from. We've got some potential deal making in the news. We've got earnings season slowly but surely getting off to a start, and that's probably as good a place as any to start. Let's go with J.P. Morgan Chase as the big banks start to tick off their earnings. Bill Barker, second quarter profits up pretty big.
Yeah, they came in above estimates, and that is good news for J.P. Morgan shareholders. Things are going a little bit better than were anticipated. Jim, what did you see on this one?
Well, remember, what was it, 3 weeks ago that Brexit was the end of Western civilization?
It kind of was.
So apparently J.P. Morgan can profit well from the end of Western civilization because they a lot of their performance in this quarter, they're tying down to trading revenues on the associated with the surge in volatility both before and after Brexit. So apparently the decline of the Western civilization is good for business if you're JP Morgan. I think they were calling for about 11% increase in trading revenue. They actually clocked in at 23%. So, combine that with the fact that their capital base or their asset base at their consumer banking, whatever, was up good. They had a surge in mortgage refinancing. They were talking about mortgage and anticipate more, probably because interest rates again getting driven down again by Brexit. The worst thing to happen in at least 3 weeks. So overall, yeah, it looked pretty good. And as a warrant owner of JP Morgan, I'm very happy with this quarter.
We'll see how it plays out with the rest of the banks when they report, obviously. But this is sort of one data point supporting what we heard in the wake of Brexit, which was among all the questions that were being asked, one of the questions being asked was, wait a minute, are U.S. banks prepared for this? And pretty resoundingly, from no less an authority than yes, you had the banks themselves coming out and giving interviews, that sort of thing, their CEOs. You also had the U.S. Treasury Secretary basically saying, yeah, U.S. banks are in much better shape, much more able to withstand anything going on with Brexit than what we saw. Because immediately a lot of people's minds went to 2008, 2009.
Of course.
Which was, I think, maybe it's too early to close the books on that one, but I always thought that the comparison of 2016 to 2008 under any guise was bizarre.
Yes.
That is, early in 2008, way before the fall, every single data point that you could look at was falling apart. We were losing jobs, retail sales were down, housing prices were already collapsing in the early part of 2008. And so when there was some market weakness in February of this year, if you can remember all the way back to that, and somebody at the Royal Bank of Scotland, I think, or
sell everything.
Sell everything. It should just sell everything. And actually, it said sell almost everything. And let's give them credit because the thing they said not to sell was government bonds, which would have been a good thing to buy as interest rates have continued to decline. So not entirely wrong about what they said to hold on to. But sell everything else. As I say, we can't close the books on that.
It's not great advice.
Up to now, that does not turn out to be great advice. But they were saying 2016 looks a lot like 2008, and I was, without having read all the report, and I didn't think that the report was thin or shallow. It was thought-provoking. But I thought, wow, there are way more things in the U.S. that look nothing like 2008 than things that do look like 2008.
No, I agree, and ironically, perhaps where something does look a little like 2008 would be in the housing markets and isolated pockets in Canada, Toronto and Vancouver being exhibits A and B. But the one thing I thought was interesting in the J.P. Morgan release was that the CEO Jamie Dimon has basically indicated that they foresee keeping their European headquarters in London. I find that interesting just because of the whole Brexit thing, where it looked like, and I'm certainly thought I'm probably contributed to this, but them taking themselves out of the European Union, you're going to start seeing a migration of the large centers and the large capital flows more onto the continent if England does leave or Britain leaves. So I thought that was interesting that they're saying, okay, yeah, we're going to stay in London. It's like, okay, well, I mean, you can always change that in the future, but that's one more, anti-Brexit's going to be a big deal to Britain, or it bolsters Britain. So I thought that was kind of interesting.
That seems to be, and I haven't listened to the call, but that seems to be completely consistent with everything I've read about Jamie Dimon's personality. There's just a little bit of, among other ingredients in that, there's just a little bit of stubbornness. Like, no, we're not moving. We're staying in London.
Well, and you can, what are the comparables right now to London and England being in the United Kingdom in whatever form the United Kingdom ends up existing, whether it is with Scotland and Wales and Northern Ireland, or some, or but not all, or give a few more votes to all that. And what's the comp? And I suppose
Antwerp,
Switzerland, right? How does Switzerland get by not being in the European Union?
Mm-hmm.
Well enough. I mean, there's some weird, oh my God, this just doesn't function at all anymore.
Well, everyone needs their secret bank accounts, right? So
they're cracking down on those a little bit. So they say. So we say.
Mm-hmm.
How are they getting by? I think part of how Switzerland is getting by is by not having to pay for a military. That's just my hunch.
As the Canadian in the room, I'm going to recuse myself from this discussion.
I don't know. It's just a hunch. Like if you're looking at the balance sheet of Switzerland, unlike a lot of other countries, there's not a lot of expenses on the military side.
Are there major league Swiss banks which are able to function despite not being part of the European Union and having a different currency? And the answer, of course, is yes. Now, Credit Suisse is not exactly.
They're not Wells Fargo. Yeah,
right
exactly.
now, but,
they're not JP Morgan, but still.
All right, let's move from earnings. We'll get back to earnings because Yum Brands reported, and we'll definitely want to get into that. But let's look at some potential deals that are in the making with two very different companies. One is Monsanto, and the other is Cabela's. Monsanto, the huge agribusiness, is looking to get huger because the reports are they are looking to buy the Agriculture Solutions unit of BASF, which is the German conglomerate, in exchange for some newly issued Monsanto shares. Explain to me why Monsanto's stock is up 5% in the wake of this news.
I'm going to try to be nice here.
You don't have to be nice, but we do
who
try
are you
to.
going to be nice to?
That's a good question.
You don't have to be nice, but we try to limit the profanity.
Monsanto is so my stalking horse thesis, I suppose here, which Bill will refute momentarily.
Well, it's wrong. That's why.
There we go.
Let him get through.
Is that once a company is revealed to be an acquisition candidate, you largely stop worrying about the day-to-day operation of the business, you as an investor, and you start worrying about, okay, so how is the acquisition or takeout going to take its form? And so back in May, there was some talk. Now, Monsanto's in kind of a lull in the agricultural cycle right now. So the stock's not doing great. They've already walked back their earnings guidance for the current fiscal year. They have an August fiscal year. They've walked it back twice already. And so into this, lull in the business and a somewhat depressed stock price, you had Bayer, maker of aspirins, because of course, aspirins and frankenfoods go well together. They made an offer for Monsanto at $122 a share when Monsanto was under $100. Apparently, nobody aside from the CEO of Bayer, who's been on the job for all of 3 months, I think at this point, believes that that's a real offer. But he insists it is a real offer, and he's pushing. He's fighting back against a lot of their shareholders who don't want to see the deal, and Monsanto, I think, probably thinks the deal's a little low too. I've seen you probably get another $20 or so, and so they basically are going shopping to make it more difficult to either A, force out a better price, or B, be an acquirer themselves. So essentially, Bayer has to go away, and this latest thing is to going after BASF's division. I'm not really sure I like the idea of issuing shares at $102, $103 a share when they've recently completed a very large leveraged buyback. They took out, I think, about 15 or 20% of their stock at higher prices than today, and now we're going to issue it at lower prices. That's not a great thing. But I think this is something of a ruse. I think they want to stay independent. I don't think they want to be bought by either BASF or Bayer, and so I think that they're trying to avoid being, taken over by somebody. But we look in the past. Look at Syngenta when they were rumored to be taken out by Monsanto. They found another buyer. You look at the whole Allergen Valiant pharmaceutical, which now seems quaint in retrospect. Allergen found another buyer, and so I think Monsanto is trying to avoid being taken. And now for the counterpoint, we'll throw over to Bill.
Well, when you brought this up beforehand, I thought, what was the last sort of rumored takeout company that I addressed on this show? And that's Hershey, the Hershey company. And I don't think that the thesis applies. If the thesis is, a strong, this always happens, well, I would say Hershey is a good candidate for a company that once it's rumored to be in the crosshairs of somebody else, nevertheless doesn't get acquired. Now, it may be
not yet.
It may be it can do whatever it wants. It may be the exception that proves the rule. That is, generally, when big money is on the table in terms of an increased share price offer, that puts pressure on the company to respond to shareholder demands that money be taken. So in Hershey's case, because of the way that the Hershey Trust owns the voting stake in the company and has no financial pressure on it, that is, its only responsibility really is to the Hershey, Pennsylvania community and to the Milton Hershey School, and there's more than enough money to cover the Milton Hershey School from now to the end of time. There is no financial pressure. So where that usually exists in this situation, it does not exist there. Other examples, we can have people send some in of companies that have been rumored to be in the crosshairs and nevertheless never get acquired.
What about Cabela's? That's another company that we had talked about in the past. That a very different business from Monsanto, sort of the outdoor gear and equipment company. That's one we've seen sort of this on again, off again. They're up for sale. They're not for sale. There's a report from the New York Post that they're nearing a sale to Bass Pro Shops and Goldman Sachs.
Right. Bass Pro Shops has been the leading rumored candidate interested in Cabela's, and once Cabela's went ahead and got assistance on fielding offers, that step certainly makes it seem like it's a matter of time, not a matter of if, for their acquisition. And it keeps sort of dragging out, but I guess if Bass Pro is the only bidder at these prices, whatever these prices are, because there hasn't been anything formally put out there, and Goldman Sachs is also in the New York Post story as a potential acquirer, I would think that would envision separating the retail operations from the credit card operations, and that Goldman Sachs is not interested in running the stores. Bass Pro would be. So I think that's where we're looking. It's a rumor that it's more than a rumor, because once you've sort of engaged somebody to consider the offers that you want to see, you're really on the.
Does this mean you agree with me? Have you walked over to my side of the fence?
No, you said always. And I said, here's a concrete example.
Always.
No, I remember you saying always. It was before don't listen to this podcast. It was before we started rolling.
Oh, okay.
You said absolutely always.
Believe me.
Without exception.
Believe me, there are plenty of people who stopped listening a long time ago. Just to wrap up on this, let me go broad, because I'm curious, this idea of companies being acquired, I'm wondering to what degree, if any, this ever factors into your thinking as an investor, either personally or with the service that you're working on, where you, somewhere on your list of here's why I think I should buy this stock, somewhere on that list is someone is going to buy this company. Does that ever happen? And if so, what is the highest that has ever gotten on your list? Because where I'm really going is, did you ever buy a stock because number one on your list was someone is going to buy this thing?
Number one, no. Number 6 or 7, yeah. I had one company back in ye old Hidden Gems days, or specifically ye old Hidden Gems pay dirt days for the 3 people who might remember that service that Bill and I both worked on. There was one company in there that was a small medical device company, and one of the things that I said was, in this world there tend to be small medical device companies and there tend to be large medical device companies. There are no medium medical device companies because the large guys go through and look at what works, and what works, the small, get bought by the large. And so that company, Somanetics, was in fact taken out. Another company, actually from the same service, SXC Health Solutions, when I wrote up in it, was that at some point, this is a consulting industry. It's in basically pharmaceutical benefit plans. So big U.S. health guys. And I said at some point they'll probably be taken out. I think we put it on the scorecard at about $3 or something like that, and truthfully, it took longer than I thought it would. But it became Systems Excellence, or it was Systems Excellence. It became SXC Health Solutions, and it became Catamaran Corporation. And I think 7 or 8 years later, it was finally bought out or put out of its misery at about $60 a share. So it's a 20-bagger in 8 years, but it was bought by United Healthcare. So, again, if it's an obvious roll-up candidate, but you can't make the bet because, again, SXC took 8 years.
Do you ever do this? Do you ever have that on your list?
No, not as a shopping component. I mean, there is the knowledge that some industries are rolling up or should be, and then there are times when you might be interested in the companies that are doing the acquiring, and then there are some industries where you can say, well, everybody's going to get bought out sooner or later. But I would prefer, and I think Jim would as well, to be invested in companies which are going to be good investments whether they get acquired or not. And if you think you've got some insight that the rest of the market doesn't on when a company is going to be acquired, I would ask how you come to that knowledge. Now, if you're in the industry and you're seeing things going on in the industry and you say sooner or later that's got to happen, to my company or to a competitor or something like that, then you may have not inside information, but you may have better insight into the dynamics of that.
Just along those lines, yesterday I taped an interview with Kayla Tausche from CNBC. It's going to be on the Motley Fool Money Show this weekend, and this is one of the things that we talked about sort of in the second half of 2015, just the idea that looking at, without giving away too much, looking at what happened with LinkedIn and sort of connecting the dots on LinkedIn being bought by Microsoft and figuring out what are other companies that may be in that same pool. Let's move on to Yum Brands. Second quarter profits came in slightly higher than expected. Same-store sales in China were flat, but given how same-store sales in China have gone over the last few years, flat is the new up, isn't it? I mean, this seems like this. At least in terms of the stock, there's a slightly positive response to this.
Yeah, that's a data point. That's a metric. The same-store sales in China. That's pretty puissant to the investing thesis and
pretty what?
Puissant.
What is puissant?
It means having great power or influence.
Oh, okay. Which
they taught you back in your days when you were studying for the SATs and have subsequently forgotten.
No.
Or gotten the question wrong. Equally possible.
That's the more likely scenario. Sorry, continue.
Puissant is to whale as, diameter is to, and then fill in the blank.
Yeah. Now you know why I didn't do so well on the
SATs. Aren't your kids studying for the SATs now?
No, the SAT's not. It's the ACT. That's a bigger deal. That's a bigger deal than the.
So they don't have to study. You're saying, based on your research.
I'm a bad parent. That's what I'm saying. I'm a bad parent who doesn't monitor his kids. Sorry. Back to Yum Brands.
Have you seen this thing going around Facebook where people are testing their word vocabularies or stuff? And
I have seen that. Posting like, oh, this is how many words I have in my vocabulary.
Everyone has the same score.
Yeah. And it seems annoying. It's within a range. Everybody who at least posts their score seems to be in the top 1/100th of 1%.
If you got a bad score, are you posting? And I've noticed you haven't posted, so I'm guessing. Anyway.
No, I mean, you're right. The scores I've seen are all somewhere in the range of like 29,000 words to 31,000 words. And what I want to do is do a little Photoshop work and just like post something 12. Where it's like, my vocabulary is 483 words. And
Me
just
talk pretty one day.
I've gotten my 7-year-old to take the test and see
exactly
how many words he or she knows. Right. Yum is going to be splitting into the China operation and the rest of the world. And so the China operation is the bigger and more profitable and more volatile piece of this. So same-store sales is always a very big number. And Yum has gone through a few food scares, a few issues with the sourcing of their food, and that has made the same kind of same-store sales declines for their China operations in KFC as similar to what we've seen here for Chipotle. It doesn't take much for a major decline in same-store sales to occur, or if, I don't know if this is saying not much, it's a real issue. But as you say, back to flat, and that's much better than last year, which I think was down 12%.
Is there anything about this business that interests you?
I'm usually the one that likes restaurant companies, even though I don't like to eat there. I mean, who are the quadruplets? The Pizza Hut, Taco Bell, KFC, and there's one more? Is there one more?
No, there used to be also Long John Silver's
and
A&W. So it was... you're going to try to form some sort of use of quintuplets or quadruplets here.
I have owned a lot of
triplets.
Down to triplets. Oh, that's too bad. But I mean, I couldn't tell you the last time I ate at any of their concepts. I mean,
do they have them in Narnia?
In Narnia, actually, I it's probably the 90s. I don't remember. And where I am, I mean, I can point you to. A whole bunch of that building used to be a Taco Bell and it's lying vacant, and that building used to be a Pizza Hut. So until about 2 minutes ago, I didn't even know that China was larger than the rest of Yum brands. So that's actually interesting to me. That are they truly an American concept anymore, or we're just selling pseudo-American concept to the Chinese? That's interesting.
Yeah, the empty Pizza Hut places are very distinctive.
They are.
They're easy to spot.
Oh, with the red roof.
And the shape but
or even if a new place goes in, there's one that's it's a really nice Lebanese or Middle Eastern cafe place up near where I am, but it's like, well, this was obviously a Pizza Hut.
Does it have the same dingy lighting, dark sort of interior?
Yeah, actually, the best one it's in the town where I live. It's a Vietnamese pho house, and it's good. It's good food. But it was previously a German schnitzel house. And when the Vietnamese owners took it over, they changed nothing. So you go in there.
So the motif is German.
It is the most bizarre place you've ever been. It's really
now
good food,
I really
though.
want to go to that
waitresses are wearing Oktoberfest uniforms.
It's really good. It's Woodlawn Road in Guelph, Ontario. There we go.
So we talked a little bit ago, an episode or two, whenever I was on talking about restaurants, and the data from this quarter again is that it is reasonably challenging times for fast food in the U.S. That's really not where the growth in restaurants, and restaurants as a whole have done phenomenally well. But it is more in the fast casual and in some cases the upper end of the scale. And McDonald's has done a great job, but the other fast food places of late are not. I don't even know if you want to go so far as to say they're struggling, but they're not growing sales.
Yeah. And that's the same in Canada. There's one company up there that has a lot of brands. It's called MTY Food Group. Has a lot of these brands, and I mean they have just their same store sales has been plus or minus 1% as far back as I can remember. So
it makes sense to separate what could be a still fast growing company, that is the China operations of Yum, and what you want to do, hopefully, when you spin that off, is to have things in reasonably good shape. And so the same store sales. Looking flat is an improvement on a year ago, and the commentary was that in this quarter things are off to a good start and they're positive. And actually, I think Pizza Hut has been still negative to like double digit 10 or 12%. But that is beginning to turn around in China. That's the Chinese numbers. With Yum, you've got to look at all three of these brands, U.S. and China. They're all different, and then on top of that, there's India and there's some other, Europe and things like that.
Just imagine how much worse this company would have done over the last, say, 3-4 years if Taco Bell hadn't had the growth and the successes that it has had with various food innovations. With like I'm being dead serious. Like the Doritos Locos Tacos and Taco Shell and that kind of thing. You make that face. That did huge business for Taco Bell. And at various points, I mean, I think that's one of the things about businesses like this where, and, on the retail side, you can look at Gap, where Gap has, Gap, Old Navy, and Banana Republic. And in any given year, one of those three is doing the heavy lifting. And in the case of Yum Brands, for the last few years, Taco Bell has, like, if you're Taco Bell, you're looking at Pizza Hut and KFC saying, I don't know what's wrong with you guys. We're crushing it.
Yeah, I think that Jim had already talked about Frankenfoods, and I guess they're sort of one of the masters.
I was going to say
of it.
They're using a lot of Monsanto's products.
I think you're forgetting the word delicious in there. Delicious Frankenfoods. Let's wrap up on Canada, and thank you again to our listeners who had sent in suggestions for places to go in Montreal for Bill and myself. You had a great time up in Montreal, yes?
I did. We had very nice weather, and it was less. The only disappointing part of it was less like Narnia than advertised. There were no talking animals.
Right.
I mean, it's ruled by a king or a queen or something, and there's perpetual winter. Elsewhere in the country,
right.
We are.
You got to keep going a little further north.
That's probably in the countryside.
All right, as Americans, this is our knowledge of the place, but I recommend that people go up there and look beyond the talking animals and see that there's a lot going on.
I'm going to be spending a couple of days in Toronto. What do you got for me in terms of recommendations? Because I've got plenty of stuff from Montreal. Apparently, there's a fireworks festival going on. So that's going to be.
I think you've missed the jazz festival for this year up in Montreal.
That's okay.
I was there.
Is that what you're there for?
No, I was not there for it. I was in upstate New York, as I am every sort of 4th of July weekend, and we made a little trip up to Montreal from there because it was just about 2 hours.
Yeah, Montreal, good eating town. Toronto's a good eating town. Lots of places to good food. I would say if you have youngish kids, visit to Canada's Wonderland, which is the not Narnia Wonderland, but it's basically the amusement park. If you like rides and roller coasters and shaking your fillings, that's the place to go. On the waterfront, take a boat tour on the waterfront. That's good. See if you can get Blue Jays tickets there because the Rogers Center. Sorry.
Yes. Rogers, that company paid a lot of money to put their name on that building.
They own the building, that was built by $600 million of Canadian taxpayer money in the late 80s. Rogers bought it for $25 million. Your tax dollars at work, folks.
Nice.
Those are Canadian dollars, though.
Still.
Loonies, as they like to call them in Canada.
Really?
Well, I don't know. My kids
Loonies and toonies.
My kids, their entire knowledge of Canada, I think, is derived from the show How I Met Your Mother, because one of the characters is Canadian. So that appears to be the only thing they know about Canada, other than the magic talking animals. And so is loony a thing that actually people do talk about?
Loonies and toonies, yep.
Yeah. They were asking me about those.
It's as good a place as any to wrap up. All right, next week I'm going to be on vacation, but I am pre-taping a week's worth of Market Fooleries. We're going to be doing a deep dive on a bunch of companies, a bunch of big, widely held stocks. So that'll be next week on Market Foolery. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you next week.